All right, what's up, guys? Anthony here, Special Analysis. Hope you're having a wonderful day. Want to talk about this past week in the daily live trade room, kind of what transpired, how the week went. Um, we had a lot of news releases, right? A lot of numbers hit the wire this past week. We got caught up in, FOMC and Fed funds rate and you name it. I mean, there was just a ton of stuff that came out. And with that, the markets really end up kind of reacting pretty rough to it. So we as traders have to decide how we're going to handle that. If the market's choppy and the market's crappy and we're trying to fight the market, at the end of the day, we're only really hurting ourselves. Okay. And putting that into perspective, what did we really accomplish? We literally probably just squandered hundreds, if not thousands of dollars. And it's all avoidable by simply having the discipline to stay out of the market. Now, with that being said, the market that did seem to work out, at least given us some opportunities this week that was not as affected by all those news releases, was light sweet crude. Now, we look at four markets: crude, gold, NASDAQ, S&P. We break all four down. I do all the analysis on them. I do all the interpretation on them. I provide the order flow that affects all of them. And we break down each market for 3 straight hours. In addition to that, I have the room up and running sometime between 6 and 7 a.m. And that room stays running until somewhere between 4 to 5 p.m. So it is the tools are there for my traders from pre-market to closing bell. They have access to the analysis, my charts, my hand-drawn interpretation of price action, and order flow. So they have everything they need from the time that they start to end. But I spent a lot of time this week during our session focused on crude oil. And I focused on crude oil, again, because it wasn't so affected by what was transpiring. So I want to kind of walk through the week real quick. It's not going to take very long. And talk about the setups that we found on crude here. And the fact of the matter was, if you were trying to fight the NASDAQ, the S&P, and gold this past week, you probably got your butt kicked. And that's just an honest statement. So starting back Monday the 11th, had a really great sell-off here. That sell-off came to an end about 6:30. I mean, listen, there's tons of great spots here to enter the market, but fact of the matter was, I wasn't at the computer. I'm not going to claim to say that I was. And our live session was not in play. So had a little recovery rally here. But obviously the higher time frame was still biased to the short side. So our session from 8 to 11, I mean, look at price action. It's sideways. Literally dancing back and forth around the VWAP. Guys, if you're trying to trade this, unless you're a proficient range-bound scalp trader, you got slaughtered. Slaughtered here. So, as you can see, there's no markings on the chart because we didn't have any consideration for trying to play with this market between 8 and 11. Higher time frame was not giving us a bias that made any sense, for one. And for two, I mean, the price action just sucked. So when price action sucks, you have to acknowledge it and stay away from it. Okay, so Monday was an absolute wash for crude oil. On to Tuesday, right here. So sure, right here, 9:12. We come into a little bit of a range, right? We're in a really nice sell-off here. All of our odds enhancers are making sense. Looking good on the 15 and 1 hour chart. This is a 3-minute chart. Here's our little drop off, our little sideways consolidation. We break that consolidation right here. If you notice, I'll extend this so you can see it a little more clear. And what was once support here gets broken and now proves to be resistance. And we have the opportunity to catch some of this sell-off. All right. Not a huge move, but the market did sell off. Ultimately, it did pull back right to that same level before it continued to sell off through the balance of the day. From the close of that candle that fell out of that little consolidation that we identified to the low here, some 128 ticks roughly before things started to kind of push back a little bit higher. So whether you held it this long or not, that's totally up to you. Once I start taking profit, which I did on this move down, I moved my stop to break even, and clearly I got stopped out. Crap happens, no big deal, but had a nice little dip here, right? I mean, the market just respected this area. I mean, took a pretty quick and efficient dip, 60, 64, 65 ticks. You can live with that. I mean, that's a day's pay with a handful of contracts. And then, like I said, the market kept going and going and going. This is after our session. There was opportunity to re-enter down here. But you could see it started to that momentum there started to slow down a little bit. Whatever. It is what it is. You only got to find one trade a day, and you're in great shape. And if the market doesn't give you that trade, you're better off not trying to force it than you are, doing so and losing money. So on to the next day. This is Wednesday. We after 8 o'clock here, we get a nice little pop to the upside. You can see we broke this prior high, came back, fell a little short of retesting it, built a little support line here, built a little correction line here, and we popped off and we took a little rally. I mean, wasn't great, wasn't anything, super fancy. 30 ticks roughly. So, pay yourself, protect yourself, grab a day's pay, right? That's what day trading is. You're collecting a day's pay. 30 ticks, handful of contracts, start scaling them out. So what? You get stopped out with the balance or whatever when it rolls back over. The idea, guys, is are you finding low risk, high probability setups? And if you're not, do you want to work with somebody who's able to so you're able to? So, to better help you kind of understand what's happening. On to Thursday. Thursday was a good day, right? So Thursday morning here, right there, 8:45, guys, off to the races. Checking all the boxes here. Really beautiful uptrend. We build a little support line. We take that nice tight little correction. We love little candles. We buy at the close here. And we really just never looked back. Okay, so buy and open that candle. I mean, we really kind of rallied into 12:30 midday, 126 ticks. Never coming back against our entry. In fact, you could see through the entire balance of the session, we never came back, and we actually continued higher from there until Friday, where we had this sell-off. So, this was really kind of a beautiful setup because it just never looked against you. 8:45 in the morning, right? Looks pretty good. Take that, keep paying yourself as the market keeps going in your favor. Get your stop to break even. Start advancing it. You could have tucked it under this little pivot here, then tucked it under this little low here. And if you did and you got stopped out here, you ultimately got stopped out with more money in the bank. But you can see how nicely price action respected the VWAP on that sell-off and then prop price right back up. So that's Thursday. And here finally is Friday morning. Here we go, Friday morning. So market's under a little bit of pressure here. It was looking good on the 15-minute and the 1 hour chart. Little choppy in this area here. Gotta let it stretch its legs. We talked about, hey, if we get below the overnight low, which was right there. I said to my traders, I'm like, if we close below the overnight low, which is this low right here, chances are we get an opportunity to sell crude. Well, we closed below it right here. The market bounced. This is the opening bell. Little choppy, got kind of sloppy in here. But we created a line of resistance. We're checking all the boxes as far as our trade plan goes. We take a little correction here. Market drops through that correction. And you can see we got a pretty decent sell-off. Took profit on the approach to 71 and then again on 70.75, ultimately reversing. Notice how big buying volume stepped in right here, and that's what turned us around for the balance of the day. So 4 out of the 5 days this past week, we found decent crude oil trades, while the other markets were pretty tough to navigate based on news releases. After those news releases had kind of flushed out, things then kind of started to get a little bit better. But because it was a very sensitive week in the NASDAQ, the S&P, and the gold market, particularly the other three that we trade, Guys, it just makes sense to avoid the market that's not working, right? Avoid the market that's not working. And it may be multiple markets. The reason we trade crude, one, because it's the first market I ever traded in my life as a trader, and I will continue to trade it for the balance of my life. It is my preferred market to trade. But we know that crude, while it does have tons of impact from things that happen all over the world, it's not so in tuned to the majority of the economic news releases that throw a wrench into the NASDAQ, the S&P, and particularly gold as well on a weekly basis. Whereas with crude, normally 10:30 on Wednesday mornings, unless there's a holiday that disrupts the schedule, we have crude oil inventory releases. I mean, trust me, we're cautious around all news releases on all markets. But there's something to be said about crude. I've traded it my whole career on a short-term basis and a long-term basis. And this week, it worked exceptionally well for us. All the opportunities that we, were able to identify that looked good on multiple time frames, ultimately performed pretty well for us. So, guys, if you're struggling to try to fight the market, and that's where most traders fail. They're fighting the market. They think they're going to beat the market. You're not going to beat the market. You must have a system in place that allows you to partake in what the market's doing. But you must first identify what the market's doing. And if the market, any market, looks like Monday, any market looks like this, and you're trying to trade it, if you're trying to trade this, you are literally gambling because it is financial suicide. Unless you tell me I am a tried and true, proficient, range-bound scalping trader. If crude looks like this, the NASDAQ looks like this, the S&P, gold, the Australian US dollar, I don't care what market, Bitcoin, you name it, Apple, Google, it doesn't matter what financial chart you're looking at. If the chart looks like this, and you're trying to trade it, you have a better than not chance of losing money rather than making money. And that's not trading. That is gambling. That's rolling the dice to see what will happen. It's exactly what it is. And that's exactly what it should not be. So if you don't have a complete understanding of price action, how volume drives price action, how price action is reactive to support and resistance, if you're not identifying targets, if you don't understand what liquidity is, where to find it, how to employ that in your trade plan, if you're not looking at multiple time frames, if you're not seeing the bigger picture and being willing to cooperate with it, guys, you're missing something. All right? There's so much out there, but at the end of the day, what's worked for over 100 years in navigating the market still works today. But you have to be willing to invest the time in understanding it, mastering it, and that takes a lot of time and practice and effort, and then employing it. So I'm shooting this video to show you that there are days that you shouldn't be in the market. And as you can see, from 8 to 11, we don't have anything here marked off. Why? Because there's nothing here to trade. The other days, we marked off areas that we liked because there was a reason to. So I encourage you to take a step back. You're too probably focused on this little wiggle higher that you're missing the big picture, or this little drop here that you're missing the big picture. Consume the big picture and then start employing that into whatever your approach to the market is. Okay? If you want to learn more about my approach, there's some links below this video. By all means, knock yourself out. You want to come trade live with me every single morning, and I'll analyze and interpret crude, gold, the NASDAQ, and the S&P with you, for you, from 8 to 11, and I'll give you all my analysis and all my tools to use all day long? Fine. If you don't, that's okay too. But what's important is capturing the big picture, understanding the big picture, and then making sure the time frame that you're trading on is in favor of it. If the 15-minute chart's going nowhere, why am I trying to trade the 3-minute chart? If the 1-hour chart looks long and the 15-minute chart looks short and the 3-minute chart, it looks like indecision, what am I trying to trade? There must be confluence. You must stack the odds in your favor. Listen, I know what traders lack because I lacked it. And I learned something new every day in the market. Every day, I learned something new. And I've been doing this for 12 years. And I know for the next 12 years, I will still learn something new every day. And I believe that that is where my traders benefit the most, is that they don't work with somebody who thinks they have all the answers, but rather works with somebody who's humble enough to recognize that the learning process never ends. And that as I learn and they learn, we all, the benefit level just continues to grow. Right? I bring more experience than most people that come to me to work with me. So they're learning. As I continue to generate more experience, they continue to learn. This is not a show. This is not a sitcom. There's no drama. There's none of that. Okay? There's no yelling. There's no screaming. There's no cursing. It comes straight down to having a calm, cool, collected, balanced emotional approach to the market. If you're lacking those things, or the person that you're learning from or growing with is lacking those things, then you're probably there for the entertainment more than you are there for the experience and the education. I'm not taking away anything from anybody else on the internet. God bless them all. I hope they're all profitable. I hope they're all great traders. I hope they're all successful business people. I truly do. To me, everybody winning is the best case scenario. But whoever you're trading with or learning from, or whatever your method of growing as a trader is, make sure that there's a path of growth, not just a path of entertainment or buying the next thing they sell or endorse or put their name on or flash across the screen in front of you. Because knowing when not to be in the market is just as or more than important to actually being in the market. And that's what a lot of people aren't going to tell you, because that's not sexy and it doesn't sell. Well, after you blow up a trading account, you'll learn that just because it's not sexy doesn't mean it's not practical. So I encourage you, below this video, there's a whole bunch of links. Learn a little bit about myself. Learn a little bit about my approach. Learn about what I provide for my traders. If it's something for you, we can have a conversation. If it's nothing for you, that's totally fine. There's no offense taken. I do this because I believe I should be helping people. But I also do this because I believe that everybody else is trying to sell you something rather than provide you a service. Now, I'm not saying that there aren't others out there that do provide the service, but there's more focus on selling than there is serving. And my goal is to serve you. And if I'm able to, I encourage you to reach out to me, and I'd love to have a conversation with you. God bless.